Well, we're going to start with all about wealth creation and how to create the type of abundance that leads to a carefree life. And we'll start with, it's three sections. We'll start with building a strong financial foundation. Then we go into investing in tech and crypto for growth, which is my absolute favorite thing, which I hope I can impart on you, the excitement that I feel around it. And then we'll cover foreign exchange for income. And the way it kind of goes is that the middle section is all about long-term growth, and then the foreign exchange is all about short-term income. So we kind of cover off both elements within this presentation. So first of all, just a quick show of hands, the ones that I can see. Has anyone invested before?
Yeah.
Yes, Leela. Anybody else? Yeah, Gemma, Helen Lewis. Cool. And what kind of things? Property or shares or who's there? Hands for property? Property, shares, crypto. Anyone in crypto? Yeah. Okay. Cool. Excellent. Okay, so we're not from an absolute scratch, which is good. Cool. Oh, I just have to go onto my screen. Right, so just want to introduce myself. So as some of you and most of you know, I'm Heather, and I've been investing since, well, pretty much early childhood, actually. I've been sort of kind of a lucky one, really, because my dad introduced me when I was really, really small. He just used to just include me. He used to have this kind of insurance salesman that they used to come around and they used to knock heads together all about investments. And I was just there drinking it in, and it's amazing what children can understand. I know Helen Lewis is really in, and Simpson are into education, but it's amazing what small children can glean just from just being around that. So, you know, I was into that, and then my mum was kind of really into saving. So I kind of just got that just from naturally. So I've kind of been more than 4 decades in the trenches. So I really kind of feel it from a kind of a cellular level. And then my own investment experience, like in the last 5 years, my portfolio has grown 2.5 times in that last 5 years. So I'm in there, I'm doing it, I've experimented, and you know, I've kind of got my methodology, which is fantastic, that I just want to share with everyone and, you know, inspire people with, because there is such a lot of opportunity out there if you kind of know, you know, what you're doing, and you know, there is just so much out there. My career has been in market research, so I'm a quantitative researcher. I've been doing that for over 15 years. So I've also used to number crunching and doing all that. So it's all numbers, really, the way I look at it. And I've done a specialised in tech and crypto, and my company's Raw Energy, and it's all about holistic well-being. So it's not just about money; it's money in order to get well-being. That's the kind of enabler for well-being. And in terms of Lenka, so I just want to introduce Lenka. So Lenka, I just feel, you know, just like fate, really, that I met Lenka, because we instantly realized that we complemented each other. You know, we just had that sort of common goal to sort of help people, especially women, to kind of understand and get literate, you know, financially literate, and understand how to invest. And then we realized we had so many commonalities, because Lenka also invested as a child, and we've done lots of different investment strategies, and you know, both got a teenage child as well. So we just got a lot in common, and we've kind of on this mission together. And of course, Lenka is a whiz at Forex, and she's invented her own methodology that she shares, and she describes it as like having your own business, but without the marketing and sales, which is like fantastic. So okay, so we will start here with the foundations. And in order to do anything, you know, you wouldn't build a house on sand or on soil. So you wouldn't, you know, it's not advisable to start investing just straight off without getting all those foundations in place, because, you know, you just need that firmness in order to get somewhere. So the way I see it is that successful investing is just as much about the esoteric as the practical. And everybody, when they think about investing, is like, well, what's going to go up? What's your latest tip? You know, what's going to make me lots of money? And I think if you don't get the basics right, then it isn't going to work, because the first thing is all about your kind of mindset and really understanding, you know, where you're coming from, and you know, and just, you know, just thinking about the stories and all the experiences that you've had and your family have had, and all those things that have gone in to your picture of the world and how money works. Because if you don't have a firm understanding of that, then you don't really necessarily know how to take it all in, or if you take it in, you might inadvertently push it away. Obviously not consciously, but subconsciously there may be some way that you look at money, the way you feel about money, that might be detrimental. So you might think, oh, rich people are evil, or you might think, you know, money doesn't grow on trees. All these kind of sayings that you've just been brought up with, they actually go in and they become part of your programming. So we need to really unpick those and understand them and create new programs in order to have a healthy relationship, the relationship that you'd want to have with money, rather than the one that you sort of find yourself with that you may not really kind of want. So, and there are also quite a lot of laws as well involved with when it comes to money. So just understanding the power of compounding, for example, is just so tremendous. And if you can get on the right side of it, you know, you don't want to have lots of debt because that's the wrong side of it. But if you can actually harness that, then that's something that's really powerful as well. And obviously just having a really good spending habits and things, it's all kind of intermingled. There's lots of different aspects to it. But it's really just getting that healthiness and learning what the laws are, your energy, you know, your vibration. So I kind of think about that esoteric side as well. So, you know, quantum physics, the way that you're vibrating, all of that will also come into your, you know, how you receive money. And then you can get into the practical. You know, there's plenty of practical skills you learn, but get those foundations right first. And then in terms of the mindset, I mean, that is really powerful. You know, we go really in deep and we go through a very, very powerful process, but it's almost like being a detective. You know, it's seeking out and finding those limiting beliefs and seeing where it's affecting you, and then just seeing, well, you know, is that serving me? Does that belief serve me, or should I actually look into that and reprogram myself to think a different way? And so it either rockets you forward or it holds you back. So we just want to understand that, you know, you actually program yourself. Most of that programming happened, you know, prior to the age of 7. So, you know, you don't even know what's gone in there. Like, what have you agreed to? The 4 Agreements is a great book. You know, what did you agree to all those years ago that you're kind of running this program, you know? And it's like, well, I don't know how I'm running. You know, it could be just completely detrimental. I could be, you know, just sending money away without even realizing it. So just understanding that sort of empowering way of thinking. And it just, you know, if you just take examples of like lottery winners, you know, although so many of them just millions, and then, you know, a couple of years later they've just lost it all. And that's because they just don't believe, maybe they don't believe they're worthy, and we can talk about that as well. And tennis players, like the opposite, you know, Ash Barty won Wimbledon, like she put it down to her coach. You know, the mindset is so powerful. Your beliefs are so powerful. So, you know, I just want to ask you, you know, are you enough? You know, you might have not expected that question to come up in a wealth creation session, but, you know, are you enough? Do you deserve to have a wealthy life? Do you deserve to have all the things that come into it? Because the answer to that question, if you look really in deep, will really have a massive impact on your life. And Marissa Peer, she said that around about 80% of people do not believe that they are enough. You think about that for a moment, that is a crisis in our existence. You know, if people just don't believe that they're enough, then how does that affect people on an everyday life? And it affects you whether you're conscious of it or not. That's the thing. It's just that insipid thing that's just there, you know, deep down. And, you know, and I've got a client actually that I'm working with at the moment, and it's just amazing. You know, she started off, her father was a factory worker, and they had such little money, and then her parents fought every single night about money, and vicious fights. And, you know, so she grew up with a complete poverty mindset. Like, she absolutely did not believe that she could have money. And then she had this other kind of thing, maybe, you know, all kind of interlinked with that. But she also believed that if any money that she got, if you didn't spend it straight away, then it would just go. So it was absolutely disastrous for her wealth. So we've been through such a powerful process. I mean, she's been, crying every night, and just because she's having to change her entire paradigm of what she thinks life is about, to realize that she does actually deserve to be wealthy, and she doesn't have to play those same sort of strategies that she learned as a child. So the overall model on which we work is called the easy model, and we look at it like a kaleidoscope. So we look at everything all at once: your attitude, the way you earn, the way you spend, the way you save, the way you invest. Everything is looked at once. So it has this magnifying approach to life. And if you go in deeper, this is a model of sort of the income and outgoings, I guess, in your world. So it starts on the left-hand side. So you start with your earnings, your savings, your investments, your windfalls, all the money that comes in. That becomes your income. And then some of it will be going out for your essentials, your lifestyle, your cost of investing. But the clever thing is, and this is where it's, the magic happens, I guess, is if you can divert some of that income to buying assets, then it's the assets that then pay you. So suddenly you're not working for money, the money's working for you. And then that's where the magic happens, because it becomes a virtuous cycle. The assets become income, and then you buy more assets that generates more income, and so on and so forth. And that's where the magic happens. That's what the wealthy know, that they don't want to tell anyone. It's just that whole kind of virtuous cycle of buying assets. And there are plenty of different assets that you can have. There's the sky's the limit there. So and even, I mean, there's just so many aspects to it, because obviously there's the savings aspect as well. You can save thousands just on just not spending as much, and we can go into that a bit another time. So as I said, my passion, I guess, is tech and crypto, but I'm obviously aware that it's a more advanced strategy. So if you've never invested before, then we wouldn't necessarily start right here. We would kind of lead you gently along to it. So I wouldn't necessarily expect you just to go whoomp straight in there, and but first of all, we will start with investing and just getting your head around that, and then we can go into that in more later date. But I just want to just give you a flavor of what this is about. So picture the scene. It's late 1800s, and you are in America. So say you're living in Florida, and you want to go and see your new niece who lives in New York. Okay, so what would you do? What would be your choice? You either have horse and carriage to get you there, or you have this newfangled train thing that can get you there in a fraction of the time. Which one would you choose? So who would choose the horse and carriage? No? Okay, who would choose the train?
Depends on how risky it was at the time.
True. There would be a risk involved, but if you had speed in mind and convenience,
sure, train
would be the one. And so this man here, he's called Andrew Carnegie. So some of you may have heard of him, but basically he had this same thought. He thought, wow, I bet people would rather take a train if this whole thing is new and things, and it's a brand new technology, but I bet if people were given the choice, they'd choose the train. So he invested heavily in the steel industry. He identified that was going to be a particular trend, so he invested in the steel industry, and it certainly paid off, because he became, he was more in the kind of, in the actual producing of the steel, but he was so wealthy that his wealth has only recently been surpassed in today's terms. So it's unbelievable how successful he was. But basically what he did was he identified a trend, and then he got behind it. So it's like, we can learn so much from that, and I learned that some years ago now, and that was the inspiration behind kind of what I do now, really. But it's just really having a vision of the future. How do you see the future, And therefore, how do you position yourself financially to be able to take advantage of that? And of course, the one thing that is amazing is that, well, first of all, there are far more opportunities nowadays than there were then. And second of all, the main advantage we have over Andrew is we have the internet and we have access to every piece of information you could possibly imagine, which is like so exciting because it's all there. It's all there for the taking. You just need to know where to look. So this is, so my son can be a bit quirky. Some of you have met him. But when he was 8, he decided that he wanted to join the knitting club at school. So there he was with all the girls at lunchtime, knitting away, knitting and nattering, I think they called it. And the other day I found this knitting, all these years later, and it looked really forlorn with all these holes in it and things. So I just thought, well, it was actually only half a reel in as well. So I thought, okay, I'm going to just rescue it a bit. I'm going to do something about it. So as I was knitting, it occurred to me that at one time in history, knitting would have been a modern technology. So I kind of thought, So I looked it up on the internet, and the first knitting that ever was in ancient Egypt, and they found some knitting in one of the pyramids, and it was a pair of knitted shoes, would you believe? And the knitted bit was the toe hole was in the middle, which doesn't sound very comfortable. But anyway, so as I thought that, I thought, wow, so knitting would have enabled all sorts of things. It would have enabled you to be able to be more flexible, maybe be able to climb. It would have been warm, so you would have been able to go more north into the colder regions. And then having that, if the technology works, you would have clothes, and therefore you can build on the next. You'd maybe then make cotton and be able to do that, weaving, and then you would just be able to do more and more and more things. You get this sort of layering effect of different technologies that kind of go on all the way through history until we get to today. And this is an interesting chart because it really shows the kind of amazing kind of speed of uptake. So this is the time it took for different innovations to reach 50 million users in years. So the airlines took over 60 years to get to that level, and cars around the same. The telephone was 50, and then electricity around about the same. But then we can see credit cards, 28 years, television, 22, all the way down to mobile phones, took 12 years to get to 50 million users. The internet, 7 years. And then some of these other things like Facebook and WeChat, we're just talking a couple of years. There was this outlier, which is Pokemon Go, which was 90 days, but that is completely unprecedented. But you can see this kind of speeding up effect, which is extra exciting when it comes to investing in tech, because obviously that means that the speed of actually getting returns on your investment go up as well. So that's another sort of added bonus in getting behind some of these technologies. So this is some, as I say, I'm a researcher by heart and by nature, and so I dug deep, and these are the kind of key tech trends that I've spotted over the years. And you can see that there is just so many, and it's the kind of culmination and the layering and of all different technologies, and it's like every sector is affected. There's not one sector that wouldn't be affected by tech. So, a really interesting exercise is just to pick the things that you're interested in, the things that you might be kind of knowledgeable about. If you've got extra knowledge about a particular topic, then you'll have an advantage over other people, which is really, really advantageous when it comes to investing. So yeah, there is just lots and lots of trends out there. And for me, it's not a case of, oh gosh, the economy, it's bad. For me, it's deciding between all these. There's just so many opportunities. It's deciding between them, not the actual opportunities, themselves. So what this all does is that rather than just getting linear growth, which is just a straight line, tech involves exponential growth. So you have this little elbow thing going on. So that's when it really starts to rocket up, and the idea is that you can invest in tech before it gets to that really kind of, big leap, because you can't really see it when it's in the early stages. Even though things are going exponentially, you can't necessarily see them. It's only when it does that you realize these kind of doubling things are happening. So this is something that I invested in. So you can see the arrow there, 2016. That's when I got into this. It's in the video. It's a semiconductor company, and you can see that it did that that sort of elbow thing. So it went up, since then 2,200%. So it's like it's just trying to do what I just said, which is to identify a trend, seeing a company that has potential, and then trying to get in early, not too early that it's risky, but just doing your homework and finding really, really good companies to invest in. So going on now, this is about cryptocurrency. So I see crypto as a kind of a subset of tech. I don't really necessarily distinguish between them, because really the companies that are crypto companies are really tech companies. They're these, just a different way really of doing things, and it's very exciting because they are creating a brand new paradigm, a brand new way of doing all sorts of things. So for me, it's a very, very, very exciting time. We're very much at the very beginning of all of this. So just brief history. I know some of you will know this already, but it came about on the back of the 2008 global financial crisis. So banks had done all these terribly risky loans to people that really shouldn't have been loaned money, and it all imploded, and there was all this, terrible, things which resulted in the banks filing for bankruptcy, basically. And then because they were too big to fail, the government used the people's money to bail them out, so adding insult to injury. And when Bitcoin, people just kind of thought, can I trust the banks? We're doing all these kind of things. And Bitcoin came about, and the first block said, Chancellor on the brink of the second bailout for banks. So it's absolutely in that space that Bitcoin came about. And the whole kind of printing of money and all that came around this time, when you just kind of think, well, are they looking after our money? So this is a kind of a system which is outside the main system, and the US is now in $28 trillion deficit. So they've just been printing money like it's going out of fashion, trillions of dollars at a time. I think it was 6 trillion last year. And it's just, because you can't really imagine how big a trillion is. It's just too big to get your head around. It's absolutely huge, and there's 28 of them. So it's got to the stage where how can it ever be repaid? It can't. So it needs a new system. So this is a very, very exciting kind of new way of doing things, completely outside of the government's control. So it's great because it's global, it's totally democratic. So it's for the people, by the people. And the way that the blockchain is designed, there is no chance of fraud. That people have managed to get into the exchanges, but no one's ever got into the blockchain. It's absolutely watertight because it's just the way it's designed. It's like all these different ledgers that are all around the world, and they all have to agree. So if you try to change one block, it wouldn't agree with all the others. So it's a very, very good way of being able to deal with strangers. There's that, you don't need trust because you've got this other system that's involved. So I can trade with anybody and safely, quickly and cheaply. So, there's this whole idea of programmable coins. So, you kind of, it's a different concept because money isn't normally programmable, but this is a new system of money where some of these altcoins can be, not so much Bitcoin, although they're changing Bitcoin to be able to be programmable as well, but it's programmable. So it has other things. So if certain conditions are met, then you can have that built within the monetary system as well. So for example, if you wanted to buy a house and the conditions were met, then the blockchain would go over. So it's and there are just so many different things that can be put on the blockchain. And so for example, if I wanted to check, if I was in a supermarket and I was buying some tomatoes and I wanted to see the history of them, I could look and see what farm it was grown on, you know, when it was picked, you know, where it was stored, when it was transported, you know, blah, blah, blah. I could find out the whole thing and it would all be on the blockchain. So it's kind of, there's just so many uses. Like this is why I was saying it's such an exciting time, because they can literally rewrite every single thing. Like, if you know, whatever industry you're in, they could rewrite it onto the blockchain. And where would that lead? So it's right at the very beginning of so many different exciting sort of things happening, and you know, and these can all be invested in. So coins are no longer just money. We can get them to do things as well. So like, just as I said, for example, if you're selling your house, then you would what they call tokenize the property. You know, so you'd actually, you know, it becomes a non-fungible token. It becomes a token that therefore is on the internet. So, you know, therefore I can do things, I can exchange it. And if your conditions are met, you don't need brokers, you don't need lawyers, you don't need banks. It all just goes, yep, you add you to the bottom of the blockchain, job done. So when you just think about the considerations, what is crypto here to stay? Well, it's worth, you know, over 1 trillion. It's just gone through a recent uplift. Bitcoin is pretty much at all-time highs now, which is really exciting. But the thing is, it's attracting all the institutional investors. You know, in 2021 was the first year that the big institutions got involved with Bitcoin. So that's kind of validating it and makes it much more solid and safer. And, you know, you realize it's here to stay. They're not going to want it to fail, because they can see that it's actually more secure than the fiat currencies they're using already. They're a lot, you know, just every day you see more companies that are investing in them. And some countries, El Salvador and Cuba, there's all these countries that are now making it official currencies as well, which is even more incredible. You know, it's got so far, it's only been going for 13 years and already it's kind of being that strong, you know, in society. So, you know, how to start? Well, you would start with the big ones. You know, there's the top, you know, top 2, then the top 10, you know, just really just starting with the ones that are solid and firm, and just learning how to do the technology. It's a little bit more fiddly than maybe buying shares, but once you get the hang of it, it's, you know, it's not that much different to buying shares. And then when you've got, you know, more of a sense of it, then you can try different altcoins, and you know, there's lots of different ways to decide between them, and that's some of the things that I teach. So, and then you just buy on exchange. It's quite straightforward when you buy the coins, and then protecting them, that's important, because you know, you need to keep them secure. So using a reputable exchange is really important. And then there's the extra, you can actually take them off the exchange and put them into what they call cold storage, which keeps them really safe. So that's really where I am kind of I've got to on that. I don't want to kind of completely overwhelm you. So I hope you're still with me. But you know, really, I just want to just say what an exciting time we're kind of living in, really. It's like, this is like the time. If you want to get involved with any of this, tech and crypto, now is absolutely the time, because it's all just completely taking off. And there are just so many opportunities. So yeah, no, I could go on forever, but I think I'll stop there. But if you want to, you know, join us in terms of, you know, us teaching you how to do this stuff, and giving you loads more information and the actual tools and technologies to do it, then please, you know, join us and have a call with us, and we can talk to you in more detail. But now I'm going to hand over to Lenka, who's going to take you through the next bit.
Thanks, Heather. And I've popped that link into the chat. So if you want to have a look at that at the end or whenever, that's fine. I'm just going to share my screen. Okay. So I'm going to continue the presentation with how to build an income from foreign exchange or currency trading. So Heather spoke about all the long-term, long range, and I'm going to cover the sort of short-term income stream type strategy. So in my Forex coaching, the goal is to make 24% profit in 12 months and that's trading currencies, working around 5 hours per week. And that's what I work with my students on. Now, why the Forex market? So foreign exchange is actually the largest market in the world. Even though it's not maybe as well known, usually people, when I talk to them, they'll know, yes, investing in property, and the next thing they'll go, oh, investing in shares. But actually the share market is only 6.4 billion, as opposed to the Forex market that has a daily volume of 6.6 trillion. So that's how much currency exchange happens every single day. Now, who are the contributors to those to that foreign exchange market? So most people can relate to travel. When we travel overseas, we need to exchange money, so that contributes to the foreign exchange. If we shop, whether that's for shoes or chocolate shoes, we're shopping in foreign currency, we're buying things from other countries, we're also exchanging money. It can be a little bit invisible because really the bank does it for you. You're paying by credit card or something like that. And then you might only see it if you get foreign exchange fees on your statement. But really, apart from that, we don't really think about it. The other bigger contributors are obviously investors. So buying a property that is overseas and we're needing to pay in a foreign currency. And also businesses. So any business software, business supplies, all that kind of stuff that comes from overseas markets is paid in foreign currency. Now, what do all these have in common? Primarily, all of them work towards a deadline or some kind of due date, or we are exchanging the money because we want or need something, like in terms of shopping. But for example, if you're a business and you use Zoom for your business and you're paying in US dollars, then you just pay on the due date when that is due. You don't sort of think about, oh, is the exchange rate, favorable for me to pay that bill? The same if you're settling a business contract, you're buying a company or a property, you have a settlement date, and that's when you have to come up with the money. So usually, sometimes you can prepare a little bit in advance, but usually you do it because of that deadline. Now, the difference with Forex traders is that we can look at repeatable patterns in the price, the exchange rate, and we only get in when it's really favorable for us. So not on a deadline, when the conditions are right. So it's a little bit like if you're at school and you've got one of those tests where you get a pattern and it shows steps going up and a waterfall going down, steps going up and waterfall going down. What comes next? So pop it in the chat box. Let me know, what do you think using this pattern would be the next action? What would go into the box? You've got something going up, down, down. What's the next bit? Up. Yes, up. So if you follow that pattern and you assume that that pattern is going to follow along, then you would think that, yes, the next arrow should be going up. That is correct. So these type of repeatable patterns is what gives traders an edge when we trade currency exchange rate. So a real chart might look something like this. Price goes down, up, down again, comes back up. So then after it goes up, what would we expect? Pop it in the chat box. What do you think? We had price go down. Let me see if I can draw on this. So that's sort of like down, up, up. Where is it going to go next? Down. Yes, down. Awesome. Correct. Yes. So these are the type of patterns that we use to take profitable opportunities. Now, if a currency pair does not have patterns, then we just stay out. Yeah, it's not tradable when it doesn't give us that edge, when it doesn't give us a pattern to follow. So there we go, came down like a ton of bricks. Now, there are different Forex trading strategies to work out, you know, which direction the currency trade is going to be going in. So a lot of people use fundamental analysis, which is looking at the economic indicators, like the financial news, what's happening in the world, what's happening with inflation and interest rates and all that kind of stuff, right? So those type of people really look at the news and read the news and understand, you know, the economics and the way that things work in the world. And then there are people that use technical analysis. So they just use the chart, which graphs the price of the exchange rate and the movement going up and down. And they use analytical sort of tools to determine, is there a pattern? And if there is a pattern, can I use that pattern to predict what's coming up next? And then can I use that to my advantage? So as a Forex trader, I use the technical analysis. I'm not really into the fundamentals, but if, you know, you have both, great. It's, you know, even better. A lot of people use either one or both. And my strategy is all around technical analysis. Now, I usually get asked this question, you know, how can I profit from the market, whether it's going up or down? Now, the reason you can make money, whether the market's going up or down, is because we're not actually buying the currency. We don't have to walk around with a briefcase of our Aussie dollars, going to the exchange and exchanging it for something else. That's, you know, a little bit old school and costly and not really the thing that we do. So what we do is, as a trader, you would buy and sell contracts called contracts for difference, and for short they're called CFDs. And it's just a basically a finance contract that says if the price goes from here to somewhere else, then I will get paid for that. And so you can choose whether the price is to be going up or down, and it allows you to take a trade in either direction, and basically allows you to then take a transaction based on just the price movement. Now, the time that you are available to trade will really be part of the thing that determines your trading style. There are a lot of different trading styles, starting from the scalper, that is someone that trades basically on the go. They are in front of the computer screen a lot, and they make decisions on the fly. So it's a little bit like if you're buying something on eBay and you're sitting in front of it and the auction's about to finish and you're like, oh, I'll put in, you know, a little bit more, and you're making that decision as you're going along. Usually scalpers would spend quite a bit of time, like say, you know, 4 hours at a time in front of the screen. And then they would make decisions on the fly. Then there is something called day traders. They would be looking at the charts during the day, and they would be taking a trade. Usually it would be all set up. They would work out their direction and how much they want to invest, and you know how they want the trade to execute, and it would be done pretty much either semi-automatically or they would set it up to be done automatically. So there is a little bit of time each day that needs to be spent on the trading, but once the trade is all set, pretty much there's not much to do because the software and the trade then plays out automatically. So in terms of the eBay analogy, it's a little bit like if you know that you know the auction will end at a certain point in time, and you say, okay, I want to bid on this particular item up to a certain value, and then the system automatically bids for you. If someone bids over you, then the system will bid for you if you're still under your limit. And as soon as you reach the limit, that's it, you're out and someone else gets the item. Or if you are the highest bidder, then you win the item. But you're not there always making the decision and actually, you know, putting the bids in automatically, manually all the time. Swing trading is even a longer term. So I do something in between day trader and swing trader. Swing traders would wait for certain patterns over a number of days or weeks, and then they would only spend a few hours every day checking. So that could be as little as half an hour a day. And so you would check if your checklist or your criteria are met, you would set up some parameters, and then the system would execute a trade for you or not, depending if the conditions are met or not. So that needs less time management, and it's more automated system. And position traders, they look at the exchange rate in terms of, you know, what's happening for the longer term. So like for months and years coming up, and they would only check maybe once a week or something like that. And they would also stay in the trades a lot longer. So they might, instead of like day traders, swing traders, they would be in for a trade probably for about a day to maybe 5 days max or something like that. Whereas position traders would be in the trade for months or more. Now, to be a successful trader, the first thing that you need to do is protect your capital. And then once you're making profit, protect your profits as you go along. So risk management is the number one key action that will allow you to be profitable long term. So first of all my students learn risk-free while they're learning, because there is you know, a lot to learn about how to use the software, how to execute the strategy, how to go through the checklist and things like that. So when you're learning, there's no point in you know, putting pressure on yourself and taking risks while you do that. So after you've learned and you actually know how to execute the strategy and how to use the software and everything, and you can see that, you know, the strategy is working for you, then you can start putting some capital in behind it. Now, every time you do take a trade, there is risk associated. So you need to be really clear on your own personal risk tolerance. And this is where the mindset really comes in. You need to be really honest with yourself and be able to identify, you know, what's your financial position, where are you at in your life, and how much risk are you actually willing to take? Because sometimes the thinking cannot be the actual true risk level of a person. So I do an exercise where what we do is try to align the calculated risk, or the risk in the mind, with the heart and the gut. And when all three align, then that's a good level of risk. So knowing your personal level of risk is really important to be able to take profitable trades and be at a level where you can basically make the trading as sustainable for you and be a successful trader. The other aspect of risk is to take calculated risk. My strategy includes a risk calculation that basically you follow along so that any risk is then mitigated by the profits, and overall the equation of the risk works out. Because a lot of people, they will go in big, especially at the beginning, thinking, oh yeah, I'm gonna, you know, do really well. They can take a lot of extra risk that then they can't sustain going forward, and that's why managing that risk, managing your capital and the profits as you go along is the most important thing for the longevity of a trading business. Now, how can that be achieved? So we would use some kind of safety net, which in trading is called a stop loss. And a stop loss is basically an order that we place at the same time as we opening a trade. And it would be at a level where we're like, okay, if the trade goes in the opposite direction to what we think, then if it gets to that level, I think, okay, I want to bail out because I don't think that trade is going to be coming back. So then you would set all those automatic exits up front as soon as or at the same time as you take the trade. So the automatic exit is great because you always know what is your maximum risk. You know that you're automatically going to get out of the trade if it ever reaches that level. And it basically helps us manage the risk and helps us sleep at night when we have trades, that running overnight and this can be executed automatically anytime, whether you're having dinner or you're, out with the kids or in bed or whatever it is. So here's an example of managing risk on a chart. So in this instance, I'm looking at this chart as follows. There is a movement down and movement up. And at this point, the overall trend is downwards. So I'm looking to take the trade downwards from here. So this example is going to show the levels that I would take on this particular trade. So I would select an entry point. Then I would select a stop loss point. So that's where I want to exit if the trade goes in the opposite direction and it's not going downwards like I'm predicting. The difference between the entry and the stop loss is called the risk. Now, this risk can be different for every person that takes the trade. So if there is all of us taking a trade, we can all take exactly the same trade, but everyone at a different risk. So someone might go, okay, my risk is $50. I'm putting $50 on this trade. Someone might go, okay, my risk is $500, and they'll take exactly the same trade with risk of $500. Or, there might be another person that's more experienced and they might be taking $3,000 risk. So wherever you are at with your trading and with your risk tolerance, that's how you would then apply the risk. Now, if we are going to risk, for example, let's say we're risking $100, then to be, to be able to put that risk out, we would want, I think most people would want at least 2 times the profit back, right? So for beginner students, we set the profit target at 2 times the risk. So the profit target would be there. Okay. So how much capital would we need for trading? So let's say that we have a risk management strategy in place and we are looking at a maximum risk of 3% of our capital per month. And let's say that we're only expecting to take 3 trades in that month. Therefore, each trade would be 1% risk. So, example, risk tolerance is $500 per trade. And that $500 needs to be 1% of our capital. So that means that our capital needs to be $50,000 for us to be able to take that trade. So capital required in this example is $50,000. Now, if the maximum risk is 3% per month, that means that our maximum would be loss would be 1,500 in that month. And because our profit target is at 2 times the risk, that would mean that it's a 60% profit. That's $3,000 per month. Now let's have a look at calculating the profit target. In this example, we're looking at taking 100 trades in a year. And let's say we're new to trading, we're pretty crap at selecting which trade, is going which direction. and we only pick 38 trades that exit at our profit target. And majority of the trades, so 62 trades, exit at the stop loss. Then we are, let's take that example that we are risking $500 per trade. And then the profit will be set at 2 times risk, which means that the profit target will be at $1,000 per trade. So overall, majority of our trades were losses at $500. So overall, we would have lost $31,000 in that year. That's on that $50,000 capital. And on the profit side, we took the smaller amount, so only 38 trades that went to profit. The profit being at 2 times risk, $1,000. So we have a profit of $38,000. So overall, over that year, it's $7,000 profit, which is 14% ROI. Now, this is just one example. This could be one currency pair over one time frame. Okay, so it depends on how many different currencies, how many time frames, and what you're doing. You can then scale this as required. Now, the next main action that or attribute that traders need is a really healthy mindset, trader's mindset. First of all, it's a trader really needs to be disciplined, because there is a trading plan in place with a checklist for how to take the trades, how to manage the risk, and it's the trader that needs to follow those to get the results from it. So the discipline to follow the trading plan is really, really important, and that all comes to the mindset. The second attribute is patience, because imagine that every day you check 5 minutes, 10 minutes, 15 minutes, whatever it might be, the charts, but you're only taking 3 trades in a month. That's a lot of waiting in between the actual action. So patience is something that a lot of traders need to be successful. The other one is honesty about the risk tolerance, which I covered in the risk management. So really aligning the risk that is calculated in your mind, in your brain, with your heart and your gut. Realistic expectations. So when you're a trader, I'm not saying you're going to get a Ferrari and a McMansion in 3 months' time, right? We're going for 24% profit in 12 months. And taking accountability for own actions. So once you have a plan, once you have your checklist, and you're executing it and you're taking the trades according to it, then not allowing sort of any news or well-meaning family and friends giving you hot tips and all that to influence what what you're doing, and just taking accountability for the trades that you do take, and also taking accountability for the trades that you miss. So in summary, to get really good results in trading, you need a proven strategy, something that has worked in the past. And it's not that it will guarantee the results going forward, but it's a good indicator of how the results will pan out in the future. A really honest risk management strategy, and something that is absolutely comfortable for you and aligns mind, heart, and gut. And a healthy mindset. Healthy mindset in terms of the your outlook on money, on trading, and how you approach your trading business. So as Heather already mentioned, if you would like to have a chat with us and talk about any aspect of both of the presentations that or both of the approaches, the long term or the short term, then please go to this link. You can book yourself a time in our calendar for a chat. So I'd like to say thank you for everyone for being here, and we will open the floor for questions